Hey, everybody, welcome back to another episode of the Canadian Multifamily Investing Insider blog. I'm Pierre-Paul Turgeon, your host, and as you probably know, former insider, used to be with Canada Mortgage and Housing Corporation, CMHC, as an apartment building underwriter. And of course, I'm a full-time multifamily investor myself with a portfolio worth over $20 million, 6 properties. And I got to tell you, folks, today, this interview with a graduate student of mine, Mike Beer. Hi, Mike. Good to have you on board.
Hi, Pierre. Thanks for having me on your show.
Yeah,
I'm excited about this.
To have you on board, right? You and I have not spoken since when you attended my workshop, second last live workshop before this crazy pandemic began in June 2019. And just now, you made my Friday afternoon. That gin and tonic I'm going to have later with my wife's going to taste even better because of you today. Because Mike just hey, Pierre-Paul, remember I took your workshop and guess what? I closed on a couple multifamily properties and I'm like a proud dad when my students take action. And that they pull the trigger and they buy apartment buildings. This stuff works. And so today I'd like Mike to share with all of us his story, how he ended up buying 2 apartment buildings, very few months. I think you said about 9 months, Mike, after taking my workshop. But before we get to that, Mike, tell us, I see you've got a nice, beautiful office with Beer Investments. Sounds like a diamond company, right? The beers, very shiny office. What do you do for a living, Mike? It's clearly not your first, those 2 multifamily properties are not your first real estate investment. So what do you do? Tell us a little bit about what you do.
Sure, sounds good. So, I got into real estate because one simple trigger as a child, I remember my family living paycheck to paycheck. My dad went on vacation. He was an engineer at the time. He went to Cuba. He came back and then he got fired. And we had no savings, no RSPs, no financial future. So I thought, you know what, my life is going to be different. So that was kind of main painful driver to get into the real estate market. So years later, I made the mistake of my biggest mistake in real estate is paying off my house, my mortgage before starting to invest. I did that, but then I got into investing in student housing around McMaster University in Hamilton, and then smaller, I would say, multifamily properties.
So this is where you live in Hamilton, right? Hamilton, Ontario, right?
I invest in Hamilton. I live in West Mississauga.
Okay, very well. Yeah. Okay, so but you've been investing in real estate, smaller rental properties, that is 1 to 4 units, I'm assuming, right? Up until you took my workshop, is that a fair statement?
1 to 7. 1 to 7 units.
Okay, so you had some small multis there because the cutoff, as you recall, is 1 to 4, that's small rental properties. 5 or more is considered commercial residential, so apartment buildings. So you had a few buildings then, okay. And what led you to take my course back in June 2019?
You know what, Pierre? I'm a very analytical guy, and then each time I was doing the math, it wasn't on buildings. I felt like a little bit I was guessing because I was taking on the factors. I thought, am I doing this correctly? So I thought, you know what? Let me take a course with you, Pierre, because I wanted to go to the next level with my confidence in the analysis. And then my dream was to own an apartment building, right? So that's kind of how I came to your course.
And how did the course help you, Mike? What do you think of the course? By the way, this is not planned. He and I literally, I got his email not even an hour ago, and I said, Mike, let's get on the phone. Let's get in a Zoom call. So I don't know what his answer is going to be, but obviously, I'm assuming the course helped you, and to what extent, and how did it help you, and how long did it take you after the course to buy your first multifamily, which was a 13-unit apartment building in Hamilton, Mike? Was it?
Correct.
Okay.
So I actually, Pierre, as soon as you said, hey, I think you send out an email, you get this online version, and then also you get this in person. So I'm always a keener. So I did the entire online version first, the whole course before your course, and then I found there's so much information in there. I mean, and so well structured. I'm very analytical, and then I liked the way it was structured. I went to your course. I think first day we went to see a property with one of your inspectors. So almost it felt so real the course. It wasn't just theory, right? And you brought in the property manager as well as the mortgage broker, uh, and then the realtor. So it felt like we're actually going through the purchase of an apartment building. Second day, I knew I was going to buy a building, no matter what, because I invested so much time. I spent the money, and I think the biggest thing that surprised me is how much content you actually provide. So I did the online course, and then I was still absorbing so much info during your course. So it was pretty amazing.
No,
The biggest
and you're
takeaway
gonna
from
make me
from
cry. At
me,
this rate, you're going to make me cry. Not only did you make my day, but so I pulled out. Do you remember this?
yes, I remember the rock. Yes,
What is it? What kind of
the
a rock is it?
gratitude rock. Yeah.
Okay, sorry, man, but this is open book, open heart. You are making my day. You have no idea because you got exactly why I do this. Because right now, people are going to be watching this. I'm going to publish this or broadcast this blog post probably tomorrow because I just broadcasted one. But people have the same offer, Mike, the online course, on-demand course, and they get to come to the live workshop. But you specifically understood why do that, so that people should do exactly what you've done. And every single student of mine, there's others like you that are highly analytical. You're probably an engineer by trade or something like that. Okay. Every single one that follows the system like I presented to you, the offer that I make, and that goes through the online course first, then comes to the workshop, they end up buying within months. You're not the first one. So I'm very interested in exactly why I try to sell both at once. Having gone through the on-demand course first, you came to the live workshop. Specifically, how did it help you with how did it help you with that first purchase, that 9 months later, that 13-unit building? Specifically, do you recall? I mean, it's a few years back, but do you recall specifically how the course helped you pull the trigger on that first building?
I think the key for me was to have more confidence in my calculations and numbers, and to know that I'm not missing anything. So if I go through the material in your course, and then and then also the worksheet, that's the spreadsheet that helps with the calculations. I know I'm not missing anything, and just because the building is bigger, it it's I think there's more at stake. Plus, I had investor money at stake as well, but I was able to kind of break it down by unit, how much repairs were, utilities, and all that kind of stuff. So it kind of makes sense. And I mean, without the course, so look, I bought a 13-unit building with 3 commercial units attached, right? I don't think I would, I would pull the trigger on that building.
Again, you mentioned the word confidence. Anybody who's watched my marketing, I tell them that it is a blueprint. You just follow the steps, and the way the course is laid out, and that's what this org chart shows now, right? You start by doing your planning, why you're investing, what are your goals, what level of effort are you willing to put in, what's your threshold for risk, how much risk are you willing to take on, and all of that. But so it starts by knowing exactly why you want to invest in multifamily properties. And then, of course, I break it down like, the bank will break it down, or CMHC, because that is how the lending industry looks at these deals, right? And by knowing that from the inside, from an insider as well, it boosts the students' confidence, because they know how to speak that language and what their mortgage broker or lender want. So I think again, you get exactly why it is structured, very structured, and it's step by step and one block at a time, one module at a time. So yeah, very cool, Mike. But it's clearly one of my goals, because I think, quite frankly, Mike, I don't think the math is complicated when you buy multifamily or real estate in general. It's not super complicated. Do you not agree?
No, you know what? It makes sense. It makes a lot of sense. But I think if you're trying to do it as a whole without breaking things down, it does get complicated. I mean, you got net operating income, you got cap rates, you got, per unit costs, and then all these different line items of expenses you have to account for. If you miss one, right, you'll be off.
Yeah.
And when investing with, like I did in that building with investors, I wanted to be one extra conservative, which I was extra conservative, and then make sure I got things right because I didn't want to under deliver. And it actually turns out we're a little bit, maybe even a tad bit too conservative, which is actually good. That was the intention. And the
Yeah.
building's actually doing a lot better than I expected.
Yeah, you have to have buffers, right? And Mike, you recall that when I teach at some point, it's after years of teaching this stuff, I teach the real picture. Do you remember where there's a break? This is the game you play for getting your financing. And then I say, with your investors, that's the other real set of numbers. Do you remember me saying that?
Yeah,
Is that
yeah.
that's something you don't hear in the industry out. But you talked about something that's very critical. You did not use your own money, your own capital to buy those assets, those two apartment buildings, right? You use OPM
Correct.
or money?
Correct.
Okay.
Yes, we have investor money in that. I mean, I
And
put
it's
in a little bit of my own capital, but
yeah,
then most of it is investor money.
and you said it, it's a big responsibility, right? Unfortunately, a lot of people, they want to buy multifamily properties, that are worth, you and I know that sometimes in your case, in my case, multi-million dollars, a few $1 million each, and they don't want to spend $2,500. Do you know what I say to these people? And I'm going to be blunt here. Probably a lot of people are going to disconnect when they hear that. To me, your mindset is in the wrong place. People that make money spend money, especially on their education. Would you not agree, Mike?
I can't remember the exact, I think you had a phrase. If you want to, something about flying with the eagles versus being a pigeon, but I remember the concept.
Exactly. You remember well. I still say that, Mike. If you want to fly with the eagles, you cannot think like a pigeon. And absolutely right. Look, and I share my story. I'm number 9 of a family of 12 kids in some mining town in northwestern Quebec. I wasn't brought up to own multi-million dollar properties like that. And so we all have a lot of hang-ups and limiting beliefs, about money. You got to get rid of those. But people who succeed, they do invest money in their education. And I have a picture of Dean Graziosi. I don't know if you know him. He's a big real estate mogul in the US. And Tony Robbins. I had the pleasure to take training with those guys, right? And they too invest. I sat down with Dean Graziosi with my business coaching group in where was it, in Phoenix, right? Like just 10 people. Like I had a business coach, and he was friends with Dean Graziosi. And Dean Graziosi told us right there, you got to pay money to learn. But if you're going to go and buy a multi-million dollar asset using somebody else's capital, you better do your homework. And I think that's what I do very well at teaching people how to do that. So how do you recommend people get over that hurdle of finding capital? How did you overcome that hurdle? Was it your first time using other people's capital in such large amounts? How did you overcome that hurdle?
I've had investors in the past, but more as in a smaller scale. So then I've had a lot of money into those previous deals that were my own. So I didn't feel, I mean, for me, my investors' money is a lot more important than my own.
Yep.
So I wasn't, I was comfortable with investing kind of without, let's say, this level of understanding of the numbers. I mean, I understood, but after the course, there's a whole other level. So I would say now it's completely different. Investing with investor money, because that mindset changed quite a bit, in the sense that people are looking to invest their money somewhere, and then not everybody wants to take these courses. Not everybody wants to be full-time in real estate, right?
I mean, there's a lot of stress involved. Like, let's not deny that, right? It's a lot of stress involved. Quick question, very specifically, did you find, and that's also something I tell in my marketing when I sell my course, did you find the actual structure? You said you really enjoyed how it is laid down and it's highly organized to attract capital, using that to approach your investors and go through the risk factors, because every deal, every investment has risks. But the way I say it, and I do this myself. Obviously, I teach what I do, but I use the same structure that I learned as an underwriter, looking at the four key risk factors. Mike, do you remember what they were? The four key risk factors?
Yes, yes.
That's your knowledge.
Okay, so you got the property, you got the market, you got the deal, right? Which I
Valuation,
would have. So yeah, the valuation, and then hold on.
borrower risk, you and I.
Right, right. Which I've presented this in this fashion.
You
I
did?
kind of do. Sorry.
You did or you did not?
I have. It's just I don't. I break it down, but I don't. Let's say your slide or anything like that
Yeah,
to
yeah.
the investor. But I always do consider. I always talk about kind of the market, the deal, the financing, and such. So I keep those within the presentation to the investors.
Because at the end of the day, right? So what I teach people is how to underwrite from a lender's or CMHC's perspective, right? That perspective is exactly the same from the lenders or CMHC's, right? And I do both. I do conventional loans financing, like for myself, as well as CMHC insured loans. But if you think about it, what does your banker want to know when you go and approach them with a deal to get financed? They want to make sure that you've assessed the risks very clearly. That's what underwriting means, right? Assessing and mitigating the risks. Well, at the end of the day, your potential joint venture partners want to know the same thing. You've done that job, right? You've assessed the risk factors very clearly. Again, it's property, market valuation, and the borrower risk factor. And how have you mitigated them? So I approach my investors using that very simple framework, and it works really, 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 really well. So this is amazing. So now you've got, and then I think you said in August of this past August, you acquired another apartment building, 17-unit building.
Yes, so that was pretty exciting. So that's in Kitchener. So we bought a 17 two bedroom apartment building, and then that one is in a primary, and then also same kind of model. Purchased that with investors. That one doesn't have a commercial component, and I found that this time around things moved a lot quicker because it seems like I know you break it down into the four areas, but it almost seems like they become a habit after evaluating. Because
Absolutely.
I've probably evaluated another 100 properties in between purchasing, so that it becomes all kind of second nature, right?
It
But
clearly is second nature. Like I do this stuff in my sleep. It's like ingrained. That's why I call it a blueprint. So I completely agree. And again, as an underwriter, that's what it was, right? Because I had to analyze these deals super fast. That's why all these tools that I have, and I've replicated the tools I used to use at CMEC, but it does become second nature, and it's less nerve-wracking the second time and the third time, and it's very cool. And even with the lenders, you kind of get used to talking the lingo and all of that. So that's super cool, Mike. I'm just curious, did you have repeat investors in that second deal by any chance?
yes, yes. So I had some repeat investors in that deal, which is good. It's a different group, but yes, I did. So what was
But some
great
of them
about
back from the first deal to the second one is the question I'm asking specifically. Did you have
I
some
had
of
a
this?
couple. I had a couple that
Yeah,
came back to
and
to
that
the
says a
second
lot,
deal.
Mike. That says a lot, right? That says that the first time you did it pretty good job, so that they came back to you for a second deal. So kudos to you. That's very cool.
Thanks.
Yeah, but
Yeah,
it is true, right? This also you built that confidence coming to the workshop, buying your first deal, and then it just gets easier. So again, it's no, it's very cool, because that's also that's what I'm hoping is going to happen to my graduates too.
we
Amazing.
had there were 17 offers on that building,
Oh boy.
and I think the what happened was I had extra confidence level to see how much I can pay up to, and I
Yeah.
wasn't the highest offer. And I stopped at a certain point and said, I'm not going to pay more, because the financials say that this is the most I can pay, and then at the same time give the investors a healthy profit. And the broker told me, you're not the highest. I said, well, it is what it is, right? And we got to be sensible here. And in the end, they sold me the property anyway. They didn't take the highest
What made the
offer.
difference if you weren't the highest price? What made the difference? Why did they go towards you versus other offers? Why did the buyer go?
They heard about my track record. they
Reputation is
and then
everything.
relationships in the industry. So it was actually very humbling, I would say.
Okay, pause. This is you're a poster child. This is you're killing me today. I think I'm gonna have a gin tonic and a margarita now. Listen,
But it was very humbling experience to actually go through that.
okay,
It was
but
great.
let's
Very.
unpack this because it's important. What do you mean? Like, so your reputation preceded you, okay? Because I'm in the middle of a negotiation with a new investor, large money, like seven-figure investment, and I'm saying, well, I can open the doors for you because my reputation precedes me. Everybody knows what I say goes. I know how to get financing. I own a bunch of buildings, but who exactly? Because I'm assuming this is your second buy, second building you bought last August, right? So who knew about your reputation specifically, Mike?
So the owner of the building heard about me through somebody because I bought a few different properties, and then the realtor was very confident because he knew my track record, and then I came in with basically talking about what kind of terms I'm going to be offering, how confident I'm in purchasing the building, what I'm not going to be looking for when I'm putting in the offer. It was very clean from that perspective.
So,
But so it's a combination of kind of, I think, track record, them hearing and investigating what I've purchased before, all that summing up, and then character.
okay, well, so let's speak about character. What I'm hearing is you behaved like a professional multifamily investor. Your demeanor, the way you structured the offer, etc. You instilled trust and confidence not only in your investors but also in the seller. Is that what I'm hearing correctly? Because that sounds like it.
Yeah, absolutely. Because the seller doesn't want the building under contract tied up for 3 months, and then all of a sudden that deal falls apart.
Yeah, again, like I said, you're my postal child now. Like I mean, it's in my marketing, make you look like a pro from the get-go. Tire kickers, not allowed in the multifamily world, right? So when you establish, hence the reason why, you got to spend the money. If you think $2,500 is too much, I'm telling you, your mindset is in the wrong place. You're not going to make money. This is not how people get rich. You have to break that, financial mental thermostat, imaginary financial mental thermostat. And you got to educate yourself, because then you speak like a pro. And you see, you're a typical example, but it isn't my marketing. I know, like, we say in French, you cannot teach an old monkey how to make faces, right? The old monkey knows that. So I've been doing this for so long, and I apply what I'm saying. So that's a pretty cool. And so, Mike, you're still in an acquisition mode, I understand. Is that you want to tell us where you're at now? I think you're interested in Alberta. You and I, we're going to have a chat about that after this interview. But where are you at now with your investments? You still pursuing more multifamily properties, I understand?
Yes. So I'm in real estate full time. I'm looking
And you
at.
never told us what is Beer Investments. I made some jokes about, it sounds like a fancy office. You're selling diamonds or something. I was thinking of the beer. But what do you do? Is that what you do full time? Your company behind, what is
Yes.
it?
So behind me, Mike Beer
Man, I don't
Investments.
even have a fancy logo like that. Whoa, I'm impressed. Mike Beer Investments. So what do you do? Is
Yes.
that full time? Is that what it is?
Exactly. So
Okay.
essentially, I've developed a model based on what you have, where we're buying apartment buildings that are value add in good areas, not in distressed areas, and then taking on investors that would like to have direct ownership of a building.
Okay, very cool, very cool. Like I'm quite impressed. Yeah, I don't do a good job following up with my graduate students, Mike. Um, Mike, was the money you spent worth it? Do you think? What do you tell students that are sitting on the fence right now? Should I take this course? Does it work? Does it not work? What do you want to tell them?
You know what? I think 10 years ago, I was like that, where I tried to look at the internet, try to find information free. But what I find, this course and the money spent, it doesn't matter, because it will accelerate. I think one's investing so quickly that that money will be paid back, I mean, thousandfold, right?
Awesome.
And it's the multiples, probably more. I just can't think of it this minute.
Just pick the number random like that. Anyway, it is a kind of business that you got to do the homework. Tire kickers, they're not like, that's why it opens doors if, you know, but you got to do your homework, right? You remember that, Mike, the planning and research module is the most critical one with, I think I would say with the valuation. All of them are critical, but listen, Mike Beer, you've been amazing. You make me proud as an instructor. You made my day. So I thank you so much for doing this interview literally on a moment's notice. I dropped everything, my negotiation with my big investor as well, and a few things, but to do this, and you've been very quite a gentleman to accept to do so on short notice. Wish you and your family well, and everybody else as well watching this blog post. Hurry up. The early bird price, so that is the combo. You get $1,000 off. You get the on-demand course, which as I just said, I'm re-recording completely using very fancy technology. You get that, plus you get to attend the March 25th to the 27th workshop. It's full 3 days now, Mike. By the way, you in your day when you did it in June 2019, it was only 2.5 days because I've added more case studies now. So it's a full, complete full 3 days, very intense. So Mike Beer, thank you so much. Thank you everybody for watching. We'll see you in the next Canadian Multifamily Investor blog. Cheers, everybody. Thank you, Mike.
Thank you.